Hi everyone, just a short video on position size. Position size is a very important part of your risk or your money management decisions. Also important when you look at position size, it is important to be able to trade more than one contract at a time. It's really difficult to consistently make money with only one contract. Every decision you will take will be a six of a nix. So you've got a good chance, because you cannot afford to lose, to either be stopped out too soon or take profit too soon, never really making good money. It's really frustrating to see the market running further in your trade direction moments after you took a profit or were stopped out of a trade. Trading more than one contract will always leave you with a chance to catch a home run with part of your position in the trade. To calculate position size, you need to know the total funds available, your risk percentage, how much you are prepared to lose on a single trade, as well as your maximum stop loss value, how much you will lose if you are wrong. There are only 5 possible outcomes for a trade, and that's to break even, small profit or a small loss, or a big profit or a big loss. You should always be absolutely focused there on not to take big losses. For example, if you would risk 2% of your money and you lose it, you lose 2,000 Rand or $2,000 depending on the currency. To get even with your 100,000 on capital, you need to make 2.04% and you make back your 2,000. In an extreme case where you on one trade would lose as much as 40%, it will mean you lose 40,000 and you've only got 60% of your money left. To make back on 60,000, 40,000 is 66%. So the bigger your losses, the more difficult it will ever be to catch up on your original trading capital. Generally, one can see low risk as taking only 1 or 2% of your total funds. Medium risk is seen as 2 to 5%. High risk more than 5, and really reckless trading where you trade more than 20% of your total fund on one single trade. Therefore, it is so extremely important to remember, cut your losses and let your winners run. I will give you use a chart here to show you how I calculate my position size. This chart here is gold, the daily, somewhere in November the 7th in 2018. At the top here, I've got a very simple position size calculator, which is downloadable from the website. Now, let's say for whatever reason, you decided that this is a trend line where you would maybe consider entering a trade, and part of your trading plan said if the market break above 1,231, you will enter the trade. You also decided for whatever reason that your stop loss will be, let's move it up a little bit, at 1,206. So let's say, for example, your total funds is 30,000, being it dollars or rands or whichever risk currency. The risk you're prepared to take, let's say you're happy with 3% risk. Now, I need to determine now my stop loss risk for one contract. So on MetaTrader 5, I've got the option of scrolling here. So what I can see here is that my stop loss risk will be 253 points, which result the same result here as where I would trade maybe in rands or dollars. So it's 253. So with 30,000 in currency funds available and a 3% risk and my stop loss at 253, I can afford to lose 900 of my capital of 30,000. In this case, it means I can trade 4 different contracts. So what will happen is if I enter my trade, I will enter 4 contracts and my stop loss will be at 1,206. On the MetaTrader platform I use, my pending order will look something like this. I will use a pending order to enter this trade. I normally enter in this case with a buy stop limit, which is sure that I get in at the exact price. I will trade a volume of 4 contracts. My price will be 1231.1. And my stop loss in this case will be 1206.3. And this is the order I will enter. If you did enter this trade, if we just move the chart a bit, it could have been a very profitable trade. Now, your next important decision is where to take profits, and I will demonstrate that in a next video. Thanks very much.